Hey everyone, welcome back to my channel. So in today's video, we're talking about the importance of investing for your own reasons and not copying other people and their investments, because everyone's circumstances are different. But yet we seem to be in a day and age where we'll listen to anyone down the pub, at the park, having a coffee with a friend, where they turn around to you and they say, I've just bought this new crypto coin, you need to get on it. Or there's a new meme stock that's got huge social media hype. Or there's a Reddit feed that has said that something's coming out and you need to buy it now because tomorrow or the next 2 weeks it's going to go from 38 pence to £5,000. It doesn't happen. And look, believe me, I want to state this, that overnight millionaires are 1 in a million. You might as well go and play the lottery. So we want to talk about not copying other people, because there was a saying I saw today and it's so true. Learn from everyone, copy no one. I'm going to say that again. Learn from everyone, copy no one. And what you can do is, I think it's really important to listen to some negatives, listen to some neutral opinions, and then the positive. And then what you can do is you can form an understanding and process it yourself to make your decision. So if someone invests in something you don't agree with, listen to it, understand why they're investing into it, have that neutral ground where someone might agree with both, and then someone who's really bullish on that, on another investment, and then make up your own decision. Also, you need to go away and conduct your own due diligence. What I want to do today is share some points with you that are really important going forward. So what's the obvious? Well, investing has become so accessible. And what do I mean by that? Well, any of us can go out and download an app, whether that's for crypto, the stock market, peer-to-peer, getting involved in startup businesses, so venture capital. We can all do it, and literally from £1 on some sites. Some have a minimum entry of 50, 100, 500 pound, but the point is we can start from day one. We can literally get involved, and you can be 18 to get involved. So literally download the app and we're already becoming traders and investors. But the experience is not there. So there's a lack of knowledge. We seem to be in a day and age where we just believe anyone. And I want to share some really important points. So if you're going to make an investment decision or you're going to make a trade, just bear in mind what I'm saying to you now. So everyone seems to be talking about investing because, let's face it, it's actually become quite cool to be an investor. If you go on LinkedIn and look at someone's bio, everyone's a property investor, but yet they've never invested into property. Or they're a trader, but yet they're not actually profitable. So everyone has the title. Everyone really likes the title of being an investor, which for some people can be misleading because someone may go on to make a decision because of someone else and their title and so forth. So we just really need to be careful and wary where we take advice from. And if you do make that mistake of copying someone, and what I would say is you shouldn't be copying someone, because I actually have a video out on my YouTube where I lost £12,000 because I basically did what I'm telling you not to do. I copied someone and as a result ended up losing some money. So I'm sitting in a position where that certainly wouldn't happen again, and I'm hoping to share this knowledge. There seems to be a lack of knowledge around investing and trading. So they're two very different things. Investing is for the long term and trading is for that short term, taking that profit in between a buy and a sell period. Now, unless you have a degree's worth of knowledge, or at least like 10,000 hours of trading, where you can buy at a certain price and where a peak will happen. And look, no one actually, even if you're a really experienced trader, and I'm friends with some really experienced and well-known Forex traders, even they can't tell you when a max peak would happen, So there is a good recommendation here. If you don't know what cost averaging is, go look it up, go watch other videos. But cost averaging essentially is buying into a market, whatever the marketplace that you're investing into, over a sustained period of time. So you drip feed your money, whether that be daily, weekly, monthly, whatever it is, but a sustained period of time. So you see a consistent, balanced, diversified growth over a long period, rather than going, I have £1,000 and boof, you just put it all in at one go. You just dump the whole load. Then your risk is massive. You're a really high risk there, because if the market changes, you could be a negative equity over time. Whereas if you've drip fed into different assets, you balance out your risk. That is cost averaging. And a great way to get out of a market and take profit, and the sensible way of doing it, is to cost average out of a market. So for example, if you are buying a new crypto coin, or you're involved in a new business, a startup company, cost average in, and then when that company is profitable and the charts are going into the green, it's going up, cost average slowly out. So have your take profit set. So that's kind of my thoughts on those, whereas many people now are reading the papers, they're reading Reddit streams, articles, Twitter feeds, where they're reading these stories of people that have become millionaires overnight because they bought at 38p, and then when the market, that price went up to £4, £5, £6, then they sold. It's very hard to guess and actually predict when that peak will happen. So there's no point waiting for the highest point. You may as well cost average on the way out. Minimal knowledge. So on your exit strategy, when I speak to a lot of new investors or even traders and I'm hearing them talk, I always say this to them. I say, what's your end goal? You know, what's your exit? What are you planning? Why have you put money into that company? And a lot of the time I actually get a bit of a non-response. You know, they're sort of like, well, I don't actually know. It's because my friend invested into it and supposedly it's meant to go up like 30-40%. That's pretty scary because you don't know why you've invested into it. So you've actually let money go that you've earned, hard-earned money, I'm imagining, and you've put it into something you don't even know how you're getting it out or the result of it. It's like crypto. You know, a lot of people are waiting for these huge spikes in Bitcoin and Ethereum, Cardano and Engine Coin, Decentraland, and they're hoping for this big win, but yet they don't actually know how they're going to get that money back. It's okay if you're a long-term investor like myself. I'm happy to let all my crypto and the portfolio that I have sit there for the next 10, 20, 30 years. And then I imagine that I'm gonna have good growth over a long period of time. And then I'll decide towards the end. But even then, I know that I'm gonna cost average out eventually. I'm not waiting for one big spike. And even if there was a spike, I know at some point I'd be able to drip feed a bit of that out. Understanding risk management is another thing. So putting all of your eggs in one basket is that a lot of people who are starting out, especially young traders and investors, they might have £500, £1,000 to use as investing. And what they do is they dump it into one thing that they've heard someone talk about down the park. And my question that I would ask you is just really validate the reason to why you're going into that. Ask yourself the question, the person who has told me, this is going to lead me on to my next point, the person that has told me about this certain investment or trade, what experience do they have? If you answer that question and they're just a cleaner at a school and they've been a cleaner for the last 20, 30 years and they've been driving the same car, you know, 2013, whatever it might be, and I'm not knocking this, by the way, I'm just painting a picture here, that has to spark some alarms with you. Basically, why am I taking advice off someone who doesn't seem to have done anything financially? Which leads me on to my next point, and that was risk management. So really understand who you're taking advice from and then the reason to why you would invest based on someone else. So that then obviously brings me on to my next point, is not taking advice or recommendations from someone who has less money than you. That seems quite brutal, it seems quite cutthroat. It's the truth. If someone has less money than you, why would you take advice from them? Because if you have more money than that person and you've generated, I'm not on about, you know, family wealth where someone's giving you the money and you know, silver spoon situation. I'm on about if you've earned more money and you've developed and you've invested better than someone else, but yet they're giving you the advice, that's a red flag for you to say, actually, I'm hearing what you're saying. Again, listen, learn if you can, take anything from that, but I wouldn't certainly go and make an investment decision off someone who has less money than me. That's just the honest truth. It's a little bit cutthroat, but it is what it is. Also, everyone's circumstances are different. You've got to remember, everyone's investing for their own reasons. Some people might need to make a lump sum of money. That's why they're trying to trade and hope for the big bucks because they need to pay someone off. Maybe they've borrowed money from mum and dad, a new car, they've got finance, whatever it might be. People invest for their own reasons. And if they don't know their exit strategy, then I certainly wouldn't take advice from them. And if they don't know why they're investing and they've got a different outcome, then I shouldn't be listening to them in the first place. Again, it's always for your own reasons. You know, for me, if I'm sharing it with you, is early retirement. You know, I'd love to retire in the next 10 years by the age of 40. So I have my own reasons. And then amongst that, obviously I plan and I have a strategy for that. And I know my exit for all my different investments and what I need to do and how much money I need to earn. I'm very clear on my goal. So no one can really deviate me from my sort of plans. And it should be the same for you as well. It's important also to reduce how much you listen in regards to people who don't have a lot of experience. So when I'm listening to someone talk about finance, I love it. I'm always open to the conversation. But when they start recommending, or I overhear someone recommending perhaps a product, an investment, a trade, a company, all I'll do is I'll just throw in, oh, how long have you been investing? You know, I'll just say, you know, how long you've been doing it, or what kind of deals have you done in the past? And when I've heard, oh no, I haven't done a deal yet, or I've never invested in that before, I'm sort of like, whoa, you know, like you're giving out that recommendation or you're offering advice, just be a bit wary. And I actually say that to people, you know, because they might go on to make a decision. You know, I'm not going to talk about it in this video, but a lot of people have invested into the meme stock AMC based on Reddit feeds and, you know, Twitter feeds of people going, you need to buy now. And if you actually go down on the AMC feeds, and it seems like I'm always going on about them, but it's just a fantastic example, is that people will actually say, should I buy? They're actually asking the question, should I buy the stock? It's just bonkers. Like, why would you ask someone else what you should do with your own money? That's totally insane. So just really remember to question someone's experience as an investor or a trader. Moving on to due diligence. This is almost something that's not even done now. You know, it's almost seen as boring. You know, why would I want to research? Why would I want to learn about it? That takes time. I need to get involved now. I'm going to miss the opportunity. It's going to go. I'm going to miss the boat. No, slow down, take a minute, minute, even talk to someone else in your family and research, learn about what you might be putting money into. It's always, I think it's just totally nuts that we can't sit back for an hour, even a day, 2 days, 72 hours and research something. I would never buy a crypto coin that I don't understand why it's been created, what the problem it's trying to solve, what's the long-term forecast, and will it be about in the next 40, 50 years? Because if it's not, I don't really want to put my money into it. The only way I'm going to actually find out about that is I've got to go away and learn about it. So due diligence, really take time to conduct your own DD. I promise you, it will save you money in the long term. A super important point as well is the quickest way to lose money is a lack of knowledge. So what do I mean by this? Well, be around people who actually know what they're talking about. And if you don't know where to go, then start networking. Go on Eventbrite and look for local events. Go to London, be in really big rooms of businesses, business breakfasts. You can go to TEDx talks, wherever it might be. Just start networking with people who are doing well, rather than spending time with people who necessarily haven't got the experience, who can't offer you that level up, who can't help you in business or your knowledge. Audible, YouTube, podcasts, learn, and that will avoid making money mistakes. Whereas if you have no knowledge, you have no experience, I can guarantee you will lose money, period. Now, one of the biggest lessons that I've also learned is to trust your gut. My God, I can't stress this enough. If your gut and your chest says something isn't right about this and it feels too good to be true, please listen to it, because I promise you, someone else is preaching about something that is amazing, high returns, above normal returns. It's not true. I promise you, trust your gut. It will save you. There is just something, we have this instinct that we pick up, almost like a spidey sense, that if something isn't right, something deep down says, Aaron, this isn't right, don't do it. But our brain says, but the returns are amazing. If I invested this, I could have this. But if your gut is saying don't do it, believe me, trust your gut. Out of all the points that I've shared with you, if you take away one, it's to trust your gut. And my final point is overnight millionaires. Yes, they happen, but they really are 1 in a million. And you might as well go play the lottery, to be honest with you, because the odds are about the same anyway. Because look, who really knows what the next big crypto coin will be, or the next huge hyped up meme stock that a billionaire talks about on Twitter and it just booms the price up? We don't know. Look, if you sit in a position of power in a big institution, such as like a sovereign fund or a hedge fund, and you've got inside information to what might be happening amongst the markets, you've got a great chance. But look, the average Joe like you and me, we don't work deep enough in these institutions or even hear about it to know what the next big thing will be. So the best thing to do is become that long-term investor. Slow and steady always wins the race, and it certainly mitigates a lot of risk. But yes, overnight millionaires, yes, they happen, but is it going to be me and you? It's very unlikely. If it is you, I want to hear about it in the comments, and I really hope someone is an overnight millionaire. But play the long game, because that will certainly get you to where you want to be financially, and you reduce the chances of losing money along the way. So if you liked this video, please do hit like and subscribe to the channel, and until the next video, I'll see you all very soon.